Hello, this is Cryptolyze. I hope you are well this Sunday, 22 October 2023. It is with pleasure that we meet today to talk about Zoomex. So it's as part of a continuity of tutorial videos on centralized exchanges, the different brokers that can exist, and it's true that with the end of Bybit on French territory, and overall I think French users will soon, even who are still registered on Bybit, I think that by the end of the year it will be over. So I'm testing different other platforms to see if there are any interesting things, and Zoomex is one of the platforms that I like for several reasons. That's just one. It still looks a lot like Bybit. We're really not far away in terms of use. It is a platform that is non-KYC with liquidity that is still substantial, and therefore can be a truly first-rate choice if we are ever looking for another platform other than the one that I have already introduced you to, or other than Bybit. Zoomex, we are top 10 in volume. We have 200 trading pairs. It's really a platform that is specialized in trading. That is to say, we don't have too many frills. We doesn't have a trading bot. We don't have all these elements. We really have purely perpetual, and that's what I also like in its specificity. Although I would have liked to have a small bot of DCA to be able to do a little DCA at the crypto level. But I think that the spot is not for them and is not their desire to be. It is really leverage trading derivatives. So as usual, we are very careful when we use leverage and we preserve our capital. It's super important. So in terms of ergonomics and the implementation of Zoomex, already in terms of liquidity injection, that is to say being able to inject funds, we have a classic deposit which is made by cryptos, but also we have an own ramp which is made available in which we can use our credit card. We have a small commission to give you an idea of 1,000 USDT. We have a little less than $5 in fees which are taken, and it is digressive. That is to say that the more we go up in the less amounts it will be so. For me, I find that it is rather coherent. It is a shame that there is not a SEPA transfer, and I think that it will not happen immediately, but a SEPA transfer, which would allow $1 directly to transfer your funds. Afterwards, nothing prevents you from using a platform like Kraken or BitGet. It doesn't matter. The one that offers free SEPA Express or at one, and then buying USDT and then switching to this Zoomex platform, it's pretty good in terms of costs. We have fees that are consistent with the market, 0.02 on maker, 0.06 on taker, so we are really in something classic. And what's more, if you're interested, in the comments have a bonus link. There is 20% reduction on your trading fees, so in the long run it plays a huge role. 20% is not nothing, especially since we are already on the classic market. So it is still more advantageous than what we can experience on other platforms. Then in terms of the interface, we are in something which is rather classic. As I told you, we remain really very close to what we were able to experience with Bybit, because we still have this graphic which is present, which is in fact encapsulated, that of TradingView. So we have the same tools. We will have the right panel in which we will find everything necessary to be able to do the trading setup, and the lower part in which we will have the already existing trades, or the orders that have been opened and the orders that have been closed, so we have absolutely everything we need. We also have settings which are rather well done, better done than on other platforms, in which here by clicking on the small toothed wheel which is there, we will have the possibility of defining here if we are in one-way mode. One-way mode means that when I open a line in long, I cannot open a line in short on the same asset. For that, you have to define the edge mode, so it allows you to have lines that are in both directions. And it allows you mainly when you have a long term that you are hanging around for a long time, and you want to edge yourself, therefore implying taking an opposite position in the event of a fall. You can do it, and it is very easy to use. Same in this recantation. We have the possibility to define our preference in terms of stop losses for the entire position. This means that I can define that the stop loss can be only at the position I open or at all of my positions. Concrete example, when I open several longs, I can, for example, here with the first option, here, selected in relation to the position, each of the longs will have its own TP and its own stop loss. And if I define on the entire position, this implies that each time I open a new long, I can impose a stop loss which goes up and a TP which goes up. It also allows me to evolve. On this, I offered you trading techniques, notably in my video on Bybit, in which I explained to you how we could, with a new long, for example, raise our stop loss to be sure to ensure a break, even if we wanted it. But there is no longer even a need for that because we have the possibility directly when we are in the open position to do it. I will show you that in a few moments. We are going to return to the right panel in which here in the cross we can define whether we want the margin to be cross or isolated. Isolated implied the margin is defined for each trade. crosses the entire account. You have to be careful, because when you are in cross and you don't have a stop loss, you can get completely burned account. So you must always be very careful, and always in all cases have a stop loss. Do not consider that a stop loss is a loss, it is a protection. Consider that the stop loss is what prevents everything to lose your account entirely, therefore systematically. Put a stop loss. Besides, it's interesting because it offers something which is very good, I also think, which will be the possibility of defining automatic stop losses. That is to say that if I define, for example, here that I'm going to go long in market, that I am going long, I have the possibility here to predefine percentages, so which are rather classic, something that we find imply to take profit. I take 25% profit, and I ensure 10% loss on my stop loss, which works very well, and which in fact gives us the prices directly. But above all, what is interesting is that here it will actually remain in the system. They will record directly what your choice is, and if you do not systematically modify it when you open an order in market on this asset, you will have the amount which will be taken, and it is rather positive, and this is precisely what allows you to remain clean in events, and especially when you make a market not to forget your stop losses, because it's always very complicated when you really react at the last moment to be sure that your stop loss is good, etc. At least you will have a stop loss and you will be able to modify it easily. We will see it in a few moments. So to do the test, we're going to go to another asset, for example. We're going to go to Link, quite simply because I already have a BTC. That will show you a bit of the interface, and we therefore have the possibility of make either a market. What does market mean? This means that I buy directly at the market price. Concretely, what does that mean? This means that I'm going to go here to the orders that are in the order book. So that is to say, I will directly select an order that is closest to be able to take the closest price. So on this, we always pay attention because depending on the volume, depending on the liquidity of the market, we can have jumps, and therefore we must always be very careful when we use the market. But it's very simple in terms of use. For example, I open an order for $20. I can define online if I want it directly by clicking here, okay, depending on the quantity. Personally, I prefer in $20. It allows me to directly give myself the risk I am taking in relation to that I am going to open a long. I'm going to define that I have 25% profit, 10% stop loss, and I'm going to directly open my long. You will see the long is open at the level of the chart. We find here the stop loss. We find the take profit. Simply take the order to define. I want my SL to be below this structure. I want my TP is above this structure. And it allowed me to systematically restore the trade in a few seconds so that it corresponded to my will and my management risk. Another thing, I have a little button which is magical here, which allows you to directly invert this functionality by clicking here. This means that here, I am long. By clicking here, he will sell my position and set up an equivalent short, all right? So that allows me to do a reversal. Personally, I never use it. I consider that it is something that is totally useless when you already have, in fact, a trading strategy that is established and you do not go to the extreme. Scalping. We don't actually need this functionality. So the other points that are interesting will be, for example, the limits. For example, we will choose our asset to really clean the graph and the limits. It's very simple. I define an order at a given price. So for example, I'm on Ethereum. I want to buy when I get to 1,623. I'm going to define 1,623 here. Very simply, my quantity therefore implies my volume, so in my case always $20. I want it to be a long one, and I want this long one, for example, to be with a TP, which will arrive at 1,647, rather classic. So the top of the structure, and an SL, which is here, for example, on the bottom structure at 1,600, we will say 1,610 to make it simpler, 1,610 here. So here I have something which is classic. When the price arrives in this zone, it will directly trigger a long, and if I click, you will see that my long is present here. I can very well take it down and move it in the same way, and I will find my long directly in the current order. I can clearly see that I have my long here. I have my TP and SL that I can modify here on the fly, and what will be interesting to see is that here we have marked reduce only. Reduce only. When we see no marked, it means that it is a position which is not intended to reduce a position. I am explaining to you a concrete framework. That is to say that, for example, I am going to position myself in Link, in which I have a position which is long, and I can, for example, ask when we arrive here in the $4, put a limit order. So here we will say $422. I will enter my position, which will be perhaps $10. We will even say $20 here, and I will define that it's going to be a short setup, and in which I'm going to directly make my short by defining reduce only. What does it mean? This means that he will remove me from the existing position. Consider it a form of tech profit that is real, okay? That is to say that my take profit will be taken from my position, and it will reduce my position by the amount that I gave, therefore $20, implying that I will have the difference between the two, because that I open a position of $20 too, the same, and these positions of $20, there will be the difference which corresponds to the profit, to the P&L that I made, for example. And so the advantage of having that is that it allows me to perform several practical sessions in a certain way. But isn't there a better way to do it? I want to tell you if there is anything better. Here there is close by. Limit. It's the same principle. I'm going to define that I'm going to have a limit which is going to be here at 9.5, 9.4 to make it simpler. I'm going to define that it's going to be an amount of 1 or even 50% of my position. Why not? I'm going to define that it's post only. It will only be posted in a thread form. So implied that I will not seek a contract to execute. I will wait for my contract to be executed, otherwise it will be cancelled automatically. Personally, I don't use it. I prefer to be very aggressive, and so I enter it here, and you can see that I have my TP, which is located here, which I can cancel quite simply by clicking on this click here, or by going to current order where I have my shorts, which are here, and I can cancel. It's really very easy to use. It's something that we find in everyday use. On this, we always have the same possibility of being able to modify something. For example, I can define in conditional orders. That is to say that it is something that will be conditional on the evolution of the price. For example, I want when we arrive here at $96, I want to execute a market order with a value, for example, of a link which will be long with a take profit, for example, which will remain at 9.7 to make it simpler. But on the other hand, I want my stop loss to be here at 9.3 to make it simpler. There I will explain to you what it is for. Mainly it will be used when this order is executed. So when the price arrives here at 9.6, it will raise my existing stop loss. At this level, so on my entire position I will be at break even. So implied, even if the price retraces, I will be at 0. So in this case, I will not have a loss here. So this is something that is really very important to master because it allows you to automatically raise your stop loss. And this is possible thanks to this little wheel, the option that I showed you at the beginning, by defining that your stop loss is on the entire position. So when he arrives at this order, he will open a long, he will reposition your stop loss to the level that you have defined for it, your TP to the level that you have defined for it. And this allows you to gradually increase your position and increase your stop loss. And why not increase your take profit gradually? This allows you to scale. And this is a good strategy when you want to follow a course other than our possible classic, which we find here in the positions. The trailing stop being the fact of determining a stop loss, which will follow the course based on the number of the SDT. Well, then it's by distance or by rate. That is to say, I always want that I have a stop loss, which is at 13%. And as the price moves, if I have an acceleration of 50%, I have my stop loss, which will go up. And when the price retraces, it will trigger my stop loss. But when I want to manage it myself, I can't use the trailing stop. I have to do it this way. And it's an interface that's easy to use and allows you to do that. In the management of your trade, in the positions, you find here the margin which is used to open your position and maintain your position. You have your P&L, which is the unrealized profit, which gives you overall how much you are in this account. You will carry out the NLP on a daily basis, which allows you to see if you have ever taken money, whether with the funding rate which is present here, or whether, for example, if you have ever done practical work gradually, or you have taken SL on a position, because you can very well also reduce your position if we ever go down with an order, for example, of sale, in which you sell if we ever reach a 5, and therefore the same as a conditional order in which you go. Define. 9.1, in which you are going to make a market, in which you are going to put a link, and you are going to make a short, in which it will be executed at the moment when the price arrives at 9.1, it will decrease your position. Therefore, implied will decrease the value of your risk, and you will take, for example, an anticipated loss. Let's say that here you have all the tools to be able to really clearly manage your trade, and it is very important to have this form of management because we have a form of management which is passive in which we plan everything. And there is active management in which you will have to readjust as the prices progress, and that will depend on your trading style, the trading strategy that you have, and that it is very important to keep this visibility there. To finish and close your trade, you have the limit orders that we talked about. You can simply make market if you want to close a percentage of the position, or directly the entire position. Thing I'm going to do here now so that I don't have any open trades. I'm also going to close cancel all order so that all orders are closed, and there I no longer have anything present except the conditional order. We're going to close it. which is generally important when you are really day trading and you are outside, for example, in the evening to really either lock your orders in break-even or to close them so as not to have any surprises, especially since it is Sunday, and that on Sunday evening we always have an upward acceleration which takes place, or in any case a strong movement of the price, with the Asian session which arrives and which anticipates the American session, which risks doing relatively badly. We know that we are in a week which is very interesting, and in any case a level of BTC which is very important, so it is always interesting to remain vigilant. If this platform ever interests you and you want to try, don't forget the link in the description to get the 20% reduction, and we'll see you for a new video tomorrow 7 p.m. for everyday life as usual, and I wish you a very good end to Sunday. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth 400 euros, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions.